Hello, trading is closed on November 28th, 2018. Yesterday we said we had some targets, and unless we gapped up smartly, they should print. Well, we gapped up smartly, so this one we'll just forget about. This one failed to print in this preferred time frame, so we'll add it to the list. We looked for a pattern with the early low and the late high. Tends to rally into the close. We got that. That's a pretty strong rally. And the question is, who would want to stand in front of a freight train like this? And the answer is me. Unless we gap over this high tomorrow, unless that happens, we've rallied to, but not through, a very important resistance area. And there's a good chance that this marks the end of the move. We'll come back to the reasons why in just a minute. During the day, MEJT said this rally is false. Target is 27.1871, most likely to print tomorrow. Again, if we gap up, that gets killed. Well, let's go over the reasons. And once again, I want to remind people, if we gap in the undesired direction, the call is killed before the open. A lot of times, the biggest point move of a leg comes on the last day of the leg. We'll go over in a minute why I think this leg's over, but certainly that's the biggest point move. We have a wall into the close. Often that's met by gapping down the following day. We said that this hole in the wall gap is unsustainable and fills at some point. This is usually a target of the inverted diamond on stilts. 14.6 targets this price here, and if you want to draw a Fibonacci grid from this high to this high, you can see all these. If it'll let me show you, I will. You can see all these delightful hits right at the important levels, and you can see how it targets that high price, but that's not all. This was the line Tom DeMark promised me he wouldn't break. It did, but just to make life difficult, he has something called the TD for Tom DeMark critical qualifier, which means we have to go past today's close by 1 cent, meaning if we gap down, this break of the trend line does not count. Well, if we gap down and this doesn't break by 1 cent, he's still looking for a 175 point move from this line, which puts you well into the 2500s. I don't know if I should believe him after he'd done me wrong like that, but there's other things saying he might be right. Here's your A, here's your B. This is a possible C, but as I've said, would be a lot more satisfying to me if wave C would undercut this low. If this is A, this is AB for A, wave B at 61.8% is right where I'd like to see it stop. And if we stop here, you would get wave red C down to complete wave blue C, and this would be ABC, and that really is what I'd like to see happen. If we break through this, the whole pattern collapses. This is a very significant trend line. Connects these. We rallied right to it, but not through it. It's very strong resistance. To continue the rally, we need to gap over this line. You spend all this energy just to get to resistance. Either the energy's spent and you drop, or you still have some and you gap over it. Based on someone else's proprietary timing model, today is a day for a change in trend. doesn't work every time, but when it works, it's a beautiful thing. Well, here's our long-term chart. These trend lines help define these lows, which I said will break at some time. And if you look at today's trend lines and take 61.8%, that's right where we stopped. So we have very significant resistance at this point. Unless we gap over it, in which case we've broken through resistance, this resistance has a strong chance of holding, with possibly, difficult as it is to believe, a very strong move down into the 2500s, perhaps 200 handles before the decline ends. Because if this is the right count, wave blue C, wave red alternate C, the blue C is just beginning here, and we can have a wave down comparable in size to alternate A, and that was a pretty good sized drop from the 2800s, almost 200 points, to the 2600s. And if we're going to drop 175 points under this trend line, that could be close to 200 points too, taking us into the 2500s where I want to see us. So this is a potential low risk entry for a short position. It's low risk because if we break through this, the whole analysis collapses. And if it's right, there's a huge reward. So it's the kind of risk-reward relationship I like. We don't have to bet any money on it until tomorrow's open. But if we move, if this holds at tomorrow's open, tomorrow's pattern is the one with the early low, it could start a very big drop, particularly, I'm not predicting this, but particularly if we gap under this low. Gapping under this low has a high likelihood of being a stuck down day and dropping right from the open. We don't have to gap under this low, but if that happens, it means this whole move is false. The whole thing gets rejected in spades. So stopping, you've got a good chance for a short position for those who want to play it. Here's your stop, and the potential is about 200 points lower. And that's today's call.